All right, let's check in now on Wall Street. Stock futures are slipping as we kick off the second half of trading in this brutal year for markets. The major indices all closed down on Thursday to wrap up the second quarter. During the last 3 months, the Dow lost about 11%, while the S&P and NASDAQ fell about 16% and 22% respectively. That's the NASDAQ's biggest quarterly loss since 2008. We don't really like to talk about 2008. That was the Great Recession, but we're going to do that anyway, probably. NewsNation business contributor Lydia Moynihan joins us live. And Lydia, does this disappointing start to the year mean that we are going to be seeing more volatility for the rest of the year? I'm not sure I can handle all that.
Well, we're sort of entering a second ice age here where everything is just cooling dramatically. You got a few data points this week that supported that, basically saying the GDP actually shrunk last quarter and that consumer spending is down, kind of a sign of the times. Restoration Hardware, popular furniture store, yesterday cut their profit expectations. That was the second time they've done that in a month. And in so many words, they basically said they were just kind of hunkering down and holding on to their cash rather than investing and hiring people, building factories. And so we're seeing what Restoration Hardware is doing amplified across the entire economy. And it's interesting, kind of the story has changed in the past few days. A couple days, everyone I was speaking with on Wall Street was worried about this rampant inflation. And now they're worried that we're going to go into a recession. And so Jerome Powell has signaled yesterday and on Wednesday that he would do whatever it takes to rein in inflation. And people are worried now, okay, well, the economy is slowing down. Have we gone too far? Are we basically pulling out all the stops to rein in inflation, and so doing puts ourselves into a recession? And the Fed is kind of a blunt instrument. And so people now are worried about what the future holds. And if the Fed came in and was just acting too late and is now, going to raise rates too high.
And I know why you say the Fed's a blunt instrument. It's because they've got one tool. They can raise interest rates, and that's supposed to do all the work we need to do. But you mentioned the GDP slipping. It's shrinking. The economy, it's contracting. But is it recessing, if that makes any sense? You were just putting out some hypothetical rhetorical questions there, but I'm going to put it to you for real. Does all this red mean that we are going into a recession?
It's a great question. I think a lot of people at this point are saying that is what they expect. But the question is it going to be a deep and a painful recession, or can it be a very brief recession where the economy marginally shrinks for 2 quarters and then we move on with our lives? The jobs data that came out remains historically low. So that is a good sign that even as we're sort of slowing down, if people still have their jobs, it's not going to be a painful recession like we've seen in previous years.
That would be wonderful, to shrink inflation and to not have a terrible recession. That is the goal. Can we do it? We'll see. It's kind of walking a tightrope. Lydia Moynihan live in New York for us this morning. Thank you.
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.